I'm Corbett Wall with DVAuction, here with your cattle market summary for the week ending February the 13th, where we saw calf and yearling prices higher for the week with a little bit of support from the highly volatile CME cattle futures, which was up and down in wide swings this week, but still ended up higher for the week, which lended a little bit of support there. Yearling feeder cattle were unevenly steady to $5 higher. Stocker cattle and calves sold $3 to $8 higher, with the Southeast leading the way for the second week in a row, as we're seeing a lot more orders go into the Southeast for grazing type cattle moving into the Southern Plains and the lower Midwest, as the really continued mild winter that we've seen in the Southern Plains and the lower part of the Midwest there is bringing those grass interests to the table quicker and faster than we've seen in recent years, especially last year when we had such a rough winter there. But unseasonably warm temperatures are just making those guys want to go ahead and start putting more of those cattle together early, even though they've been putting them together for the last couple of months. But we're just seeing that continue. We're not seeing near the premiums in the Northern Plains for those lighter weights as we normally do compared to the Southern Plains, even though those Northern Plain cattle are a lot fancier and more uniform and all one solid color, mostly black. But you know, a grazing type calf weighing around 5 has just about as good a chance to bring close to $2 in the Southern Plains, maybe in southern Kansas, as it does up in South Dakota, even though those northern cattle are really more desirable and nicer to look at to the eye. But we're also seeing narrower spreads on your yearling cattle too in the north and the south, as down in the Southern Plains we're starting to see those greener wheat cattle come to market in the heavier weights, compared to the Northern Plains where most of those cattle are not quite true yearlings. I mean, they got a yearling look to them, but they're not quite a year old, and a lot of those feedlots would really rather have those cattle have been turned out in the elements there and eating your wheat. But also on your heifers, narrowing of the spread there too, as we're seeing a resurgence of demand for replacement quality heifers, which is boosting the market a little bit for those and bringing them closer up to the steers. But your markets are really searching for a direction right now, and there's good demand from your backgrounders and your cattle feeders, because they've made good money on the last 2 or 3 rounds of cattle they had, and that's how they know to make money, so they're jumping right back in there again. But really we're starting to get to the edge where our fundamentals are about to peter out. Maybe, you know, not next week or the week after, but you know, your cattle markets and your analyzing of your markets are always reaching out further and further, and we're just now starting to get to the climax of our tight numbers, and we can't really take advantage of that anymore, just because we go out front and we know things are fixing to really start to peter out. And your bears are really searching harder for a reason to push these prices down than your bulls could ever hope to find to bring it back up. But we are entering into spring, which is always the best demand for your growing type cattle, to turn them out and get that cheap gain on them. We're entering the time of the year where it's going to start thawing out here down the road, and your meat buyers will start preparing for that, and we'll always have better demand for grilling type beef as we get closer to spring. In Bowling Green, Missouri, at the Eastern Missouri Commission Company there on this Friday, they had a load of 817-pound steers bring 207. We collected that information on Cattle Market Central within seconds of when it happened. In Phillips, South Dakota this week, we had replacement quality heifers. There were 2 loads there, average 758, bring 251, and that's $1,900 per head. So we're still seeing those big prices for those types too, and they'll grow those heifers till they get to be a weight that they can turn a bull with them there and make some breeding heifers there. You know, your feeder cattle, pretty much all weights and across the board, are still selling 20% higher than they were this time a year ago, and we were in the middle of really jumping through it a year ago this time. Fat cattle are still selling 12 to 13% higher than they were a year ago, and we're really entering the time where we're going to see our tightest market ready supplies of fat cattle, and you would think that we would just be gaining $5, $10 every week on our fat cattle, but these packers are real restrained right now. Box beef levels have kind of struggled here of late. Their margins aren't the best. This week we really didn't see any fat cattle trade at all, really, on a negotiated basis, not enough to really establish a market. And the reason they didn't want to do that, they knew they was going to have to give more for cattle if they tried to get very many of them bought. We're looking at our February live cattle contract, which is getting close to maturing here. It ended the week right around 160 there. If they had to jump out there and buy cattle and really sink their teeth into them, they were going to push that price up, which could spur a rally on your live cattle board going into this next week. So they really didn't want to do that, so they just decided, you know, we'll just kill what we've got spoken for in our captive supplies. Year-to-date slaughter's already down 7.4%, you know, right here going into the end of February. So that pretty much wraps up your cattle market summary for this week. For this report and more information, check out our website at DVAuction.com and the stockexchangenews.com. And from a home office here near Maysville, Missouri, we'll talk to you next week.